of course, on Mondays as always. Thanks for joining us today. I just got a clearance that the sound is good to go. So thanks again for joining. Hosted by binary.com. My name is Chris, by the way. And before we actually start looking at my trading and my chart and technical analysis, we do have the risk disclaimer, of course, to share with you. And the fact that trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. Please therefore seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only, and it's not advice. And you could always, of course, ask for a copy of this risk disclaimer by contacting binary.com via, for instance, an email. And if by continuing watching this webinar, you agree with the disclaimer mentioned here. Alrighty, thank you so much for your attention. If you are not able to make it live, you can always register at blog.binary.com/weeklytradingroom, where you'll be able to get an email when the recording is available for you to watch at any point in time. As always, this is our goal for today, these 5 pairs at minimum and the economic calendar. So let us take a quick look at that calendar. And we could see, for instance, that last week we had NFP, and that of course is always a big event. And NFP showed that we had some bullish numbers on the US. Non-farm payroll went up. Unemployment rate dipped down below the 6% since a very long time. So positive US numbers. And in that regard, maybe a dollar continuation of the strength. If we look at least at the economic figures, there's nothing blocking that particular trend from continuing because we had good numbers last Friday. Now, this basically we have Aussie cash rate, of course, is a big one to keep an eye on. And the pound, by the way, also interest rate on Thursday. Of course, there are other news events that you might want to be aware of, but these two are the ones I consider to be the most prominent, basically. So let's move on and take a look at the euro-dollar 4-hour chart. Here's the technical analysis, or part of it, obviously. Basically, looking at the euro-dollar 4-hour chart, one way of viewing this downtrend pretty neatly, the downtrend channel in capturing this downtrend nicely. Now we can put this channel in a number of ways. In fact, this is just one of them. You could even put it like this and make this a bit less steep. And you can see that maybe the euro-dollar now is at the bottom of the channel, for instance. Now, we've seen that 3 times earlier, the channel has provided as a bouncing spot. You can see that here, and here we have the green dots, and here. So maybe that could be the same now. We are back at the channel, at the bottom of the channel, plus 125 obviously is a round number. It is a quarter number. It is an important number to reckon with, and could be a bouncing spot for the euro-dollar within this downtrend channel. Basically, let me say it this way. It is a downtrend, but it's at a rough spot. Will the downtrend continue? Now, if price breaks below 125, I will be looking for intraday shorts throughout this week. That bottom is important because then price is breaking below support and is breaking below basically the 125 psychological number. If it doesn't, and it doesn't look like it's doing that at the moment, it looks more like it's bouncing. So if it stays above 125, I'm expecting some kind of retracement probably to about the 38.2 fib. If we zoom in to the hourly chart, you can see by putting a fib on the very last move here, I wouldn't be surprised to see price then move back to one of these fibs, for instance, or any of these fibs for further downside. So I am interested in shorts from these retracement fibs and these discount levels. And you can see here we broke on Friday a very good trend line and just crashed ever since. So that's my plan, basically, waiting for shorts at higher spots or below the bottom. And this, that's basically what I will be hoping for. Now, it also depends how price basically moves to the upside. If it moves very fast and then starts to do like this, like a bull flag after an impulse up, there is a good chance price could make one more of those moves and could retrace all the way to the top of that channel. In that case, basically, I would even maybe consider waiting till, for instance, a higher retracement level, a higher selling price before attempting that short. Obviously, of course, if price were to really get aggressive to the upside, which I don't expect, and break to the to the upside out of this downtrend channel, well, obviously then my dollar bullishness at least is temporarily put in the fridge and the freezer, and I would not be as enthusiastic as I am now on the euro dollar downtrend. So that's my plan basically. Bearishness, but I'm going to keep an eye on how price moves in this zone and if it's able to get to these retracements and how it does get there, and if it's then eventually able to break below this bottom. Otherwise though, it's a very nice downtrend channel. It's just, it is right at this bottom. So we could see maybe Monday, typically a slow day, relatively slow day compared to Tuesday, Wednesday, Thursday on average, and wouldn't be surprised to see some retracement on a day like that. Now let's take off this fib and zoom out to the daily, and you can see that the acceleration here basically getting actually more and more thrust to the downside. We had very big daily candles in here, and actually on Friday yet again. And if you look at that on a monthly chart, for instance, you can see actually that last month's September candle, of course, because if we compare the analysis compared to last week we didn't have yet the end of September. Now we do. This is actually our first session in October. And if you look at the size of that September candle, it is the biggest bearish candle so far of this downtrend. So this looks like an acceleration. This looks like a continuation. This looks like a very good downtrend after the break of the rising wedge, like these purple lines. So when we break 125, I wouldn't be surprised to see price fall, for instance, to this purple trend line, which is the bottom still. This is a bottom support line. Could be a stalling spot, could be a bouncing spot for price where it could stall. Right? Of course, obviously, this is a support level that we have to be aware of. So once we break 125, I think the target from a swing trade perspective could be the bottom of this channel. From an intraday perspective, of course, it's different, and we could see some daily bounces up and down. But in the long run, I think price is going to get to this bottom of this channel, or this triangle, this purple line here. And probably after it bounces a bit at that line, I'm expecting a further crash to the downside. So I am bearish on, let's say, medium and also longer term. But in the medium term, we might drop to the trend line, but then see some kind of bounce at that line. It's possible. We have to be cautious of that perspective. Now, when price breaks this purple line in this bottom of the triangle, what targets could we keep in mind? Basically 113. Of course, the 120 psychological level, 113, and then even parity. Those are the fib targets, basically. In any case, last month's, to get back to a bit more current events, before going too far into the future, last month's low was broken. So that, of course, says something about the fact that support is, at least from a monthly low and high point of view, is out of the way. So for my feeling, the 125 is the only thing that's remaining. And if you look at the weekly candles, mostly all these candles have lower lows and lower highs. I would not expect a bigger retracement than last week's high, which is 127. And if we take a look at the 4-hour chart, that makes sense because last week's high is basically above the 4-hour top. So price could really retrace anywhere to any of these fibs, but not above, I would say, the 127 level. All right, let's take a look at the pound dollar. Pound dollar, in all honesty, quite similar to the euro dollar. Also, pound is showing bearishness, basically. And if we put a fib on this swing high, swing low, you can see price stopping at the 78.6 fib. after hitting the 38.2 and making kind of a zigzag, respecting the zigzag, falling, and now breaking through the support line and making further downwards extensions. So here too, price is back into a downtrend on this 4-hour chart after breaking support. It's below a resistance line. It had on Friday, with the NFP event, an acceleration of that downtrend. So any upside, I think, is just a retracement for more downside. And as long as price stays below this resistance line, I would think that either the 38.2, the 23.6, or the 50 fib are probably the most likely turning spots for downtrend continuation. Looking at the daily chart, you can see very strong daily candle breaking these support levels. Weekly chart. Let me get rid of these trend lines here. You can see a very strong bearish candle. I wouldn't expect, as I said with the euro dollar, a break above last week's high. And the monthly chart, last but not least, also pretty decent bearish candle. Maybe not as strong as the euro dollar, but obviously very bearish monthly candles. Now, it's a bit different in the euro dollar because we've had bearish candles, but in fact it happened after a pretty interesting bull run. So that's a bit different, but for the moment though, I wouldn't be too concerned about that. For the moment, the weekly, monthly candles are all bearish, so I would, in this case, probably put a fib from last week's high down to the bottom most recently. Yeah, anywhere, as I said, 23.6 or the 50 fib for downside continuation. Let's see what kind of targets I have in mind. 158.60 is the first target. When it moves down, it's also equal to this bottom here. Obviously, this is a support level. If it breaks below 158.50, 158.60, then 157.50 comes in vision. So that's basically, roughly speaking, what I'm expecting on the pound. Here too, last month's low has already been broken. So I don't think much is standing in the way of the downtrend continuation. But, you know, Monday could be a slow day on the pound as well. So this could basically potentially just go flat throughout the day, and or make some correction up to the 38.2, and then maybe later this week we could see that fall and continuation. The pound, of course, is also a bit different because it has Thursday its own interest rate decisions to make. So that makes it more riskier, and price could be more flatter because of that. But obviously, the same analysis is valid as the euro dollar, that if price does break below the bottom or retraces higher, the pound dollar could be interesting to keep an eye on as well. The odd USD. Now, the odd USD, this is the hourly chart, is a bit different in the sense that the odd USD is bearish too. And if we look at the monthly chart here, sorry about that, let me get rid of this fib. If we look at the monthly chart, here too we already broke last month's low. Here too, last month was a tremendously bearish candle, actually even more bearish than the euro dollar and pound dollar probably, because it was a massive breakout candle, a very huge candle of 700 pips that closed very near the low and just totally destroyed basically the consolidation zone we saw 6 months prior to that. So yes, bearish, but there's one key difference here. The key difference is the bottom. So although obviously price action is bearish, the trend is bearish, it's in a downtrend, there's no doubt about that. Making lower lows and lower highs on this weekly chart, a lot of downside pressure in the Aussie. Price has to break through that bottom of 86.60 before it really gets interesting, or price has to retrace some, at least back up to the weekly high, like it's doing here. And for instance, we could put a fib on this very last down move. Yeah, and price, you can see it's aggressively moving up above the 38.2 fib as we speak. And it doesn't seem like it's stopping. I could put a fib, for instance, on this very first correction. And for instance here, the 50 fib together with the minus 618 at 87.35 could be a spot for downside continuation, or 87.60. All of these levels, I think, are resistance spots for more downside. Of course, I never know. Obviously, there is a chance that price could just really start to move up aggressively. If that happens, I'm keeping an eye on the top here at 88.26. If price breaks through 88.26, then obviously I'm going to be more cautious about that bearishness, because then price is bouncing off the bigger monthly support level stronger than I imagined. If price does break below the blue line here, then of course here too bearishness. For the moment I'm cautious though. I want to see how far price can get. But if it gets into that resistance zone, preferably as close as possible to this top, as close as possible to this top, I would also here on the Aussie, despite the stop at the monthly support, be interested. Because I think that monthly support is just going to be one of the pausing spots for more downside. So here too, specifically interested, very interested in the 87.80 level, for instance. All right, the dollar yen falling. And how is that possible? We're in an uptrend, right? You might think. Well, we are definitely in a strong uptrend. A strong break of the correction here occurred somewhere in August, and we've been moving up a lot. And if I look at that momentum, I don't think that the uptrend is finished. I do think that the uptrend is still in play. I do think that the dollar trend will also push the dollar yen higher. But maybe not right now. Maybe not right now, because price is showing signs that it could make some kind of correction or consolidation right here. If you look at the 4-hour chart, or even hourly, what do you see? Well, you see price making a big correction here. Where? At the 110 resistance level. 110 resistance level was already a level I said, be careful, watch it, it could be danger. And it was big danger, a big fall. Now, I don't think that fall is it. I think that this is going to start the corrective phase, which either means price is going to make a triangle, something like this, and then most likely continue up, or price could even correct like this and make a deeper correction. At the moment, I think the triangle seems the most likely, because price retraced pretty deep here. So I would be careful of this zone. If anyone is in a short, I am careful of that support level at green, because of the potential of a triangle that could be building here on the dollar yen. But to be honest, it could be both. It could also do something like this and retrace all the way down to the 38.2 fib. Now at the moment, it stopped at the 23.6 fib. The next bouncing spot could be the 38.2 fib. I would be very interested in looking for longs at the 38.2, or after price completes the 5-wave triangle. At that blue dot, I would be very interested. So either upon the completion of the triangle or at the 38.2 fib. What are the two? Now, why do I think it's still upside? Because if I put a fib, first of all, it's very big momentum. So I think there's going to be a follow through. And if I put a fib from this swing high to this swing low, those are the fibs that I'm keeping an eye on. If price breaks below the 38.2 fib, all things are different. The bullishness is not the same. And I actually would be cautious about it, because it could be different. It could be not that bullishness as I expected. Who knows? I'm standing on the sidelines, neutral. And if it's below the 61.8, then it's probably not even it's probably the end of it, of the uptrend. Earlier than I expected then. So those are the levels, important levels. The 23.6, 38.2, the 15, the 61.8. That would tell me the likelihood of what can happen. Now, if price indeed makes a triangle or bounces off the 38.2 without going below it and stays here for a while, I wouldn't be surprised. But then if it does do that, I'm expecting uptrend continuation up to 115, 120, etc. All right. So otherwise, I don't really have anything to add. Last month was a very bullish candle, so I'm not expecting a lot of differences here regarding um, the trend. I think the dollar yen will stay in uptrend. It's just there is a potential here for the dollar yen to make some consolidation. All right, let's take a look. XAG falling again with the one more bearish week down below 17. XAU has reached the bottom. We talked about this one several times. You can see price reaching the bottom. Friday was, of course, a bearish day on the XAU USD because the dollar was gaining not only against the euro, for instance, and other pairs, but against gold and silver as well. And gold reached 1180 finally, as we've been monitoring the fact that the price will probably hit that bottom. I was looking at last week the fact that price could break this purple consolidation here for more downside, and that's what it did. Broke the consolidation and made it that sprint to the downside. Now bouncing off the bottom, and of course this is a difficult spot for gold because it is again at the bottom. Will it be triple bottom? Or will price be able to muscle itself below this heavy support level? If it does break below, there could be some good, of course, follow through. If it doesn't, yeah, price could basically just bounce and rebound back to, for instance, the top. It's difficult to say here, right? But it could, at the moment, make even a rebound up to there, or just go sideways like this. It's really a support level like this. We never know how price is going to react to it. All we know is that price is at a heavy support level, is that I want that support level broken. Otherwise, I would not be interested in trading gold if I were trading gold. And at the moment, I am just pausing and keeping an eye on it. If it breaks below blue line, breaks below 1180, that would change things. If it goes sideways like that, it probably will have a bearish break. But at the moment, this could be a bouncing spot too, and it could bounce all the way up here. So I want to keep an eye on how price reacts when it gets up to this resistance. That will be a telling sign, because if it hits this and then starts to move down, it's probably not going to be a very impulsive break, most likely. Although, yeah, I mean, let me say it this way. The bottom line is the key support line, and this trend channel is a key resistance line. As long as price stays in this downtrend channel, it looks bearish. But as long as it stays above the support, there's reason for bounce. So it's caution time. And if I see reasons to go, see good rejection at the top of the channel, it could be a good shorting zone. If it breaks below support, it could be a good bearish breakout. So those are the two things I'm thinking of, basically, on gold. All right, thank you so much for joining us today. I hope you found that useful, and if you ever have questions, of course, you can always use the chat that is available. And I do look forward to see you next week, the 13th of October. I think we will have, I will actually have, let me check that. I'm not 100% sure in the meantime what the next session will be. But it's going to be, of course, if there's any session, it's always on Mondays. And let me just quickly check that, in fact. Because I think that 2 weeks from now, either next week or 2 weeks from now, there's going to be a public holiday in the US. And I have one day planned off. In any case, this blog.binary.com/weekly trading room is the link that you could use to get a recording and the heads up here when we have the next session. Sorry, when we have the recording ready for you. Yeah, next week no session because it's indeed the bank holiday is on the 13th of October. So our next session will be actually 2 weeks from now on the 20th of October. But wish you very good trading in between those 2 weeks and the next 14 or 10 trading days, in fact. Wish you all a good week and weeks ahead as well. And I look forward to seeing you again on Monday, the 20th of October at 8 a.m. UK time. Cheers, everyone. Thanks.